You are mute. Can you please? Yeah.
Am I audible?
Yeah, audible.
Yes, Moksha.
My question is on the T90 tanks. So, does special steel profiles for T90 tanks contribute to revenues currently? And what is the revenue potential in this division? Like, we recently got an order approving uh, 54,000 crores in capital additions. So, how is this going to benefit us?
Yeah. So currently, it does contribute to our revenue per se. If you look at the numbers from December 2024, that contribution has been small but significant because that opens up a perspective for us. Put into numbers, you can estimate about close to 10 12 crore rupees in the current financial year. As to your question with the 54,000 crore rupees order, what percentage we are going to get? It's too early days because out of that, they have spoken about upgrading the engine from the 1000 HP engine to 1350 engine. So these are more kind of a retrofit. So I wouldn't be able to put a number on how that translates for us. As I mentioned earlier, with every new tank coming in, the import dependence has gone down because now there's an Indian source like us available. So we will definitely have some contribution towards it.
Okay. And what is the revenue potential or the opportunity size if you could put a number on that?
Again, Moksha is very difficult. That is that it all depends on how they're looking to do the retrofit that you spoke about. The design is still, under construction in terms of how it has to go through with the fitting of an higher capacity engine. But that will require some modifications on the steel front, which we will supply to that. But to put a number, again, very difficult. But we see this business growing with the army tanks. The demand increasing with both for the T90 and the newer tanks that they're looking to build with the faster tanks. The numbers will keep increasing for us as we move forward. So now there's no dependence on import, and we will be able to supply them.
Okay. And any update on the 2,000, 3,000 units of orders of wave optics from L&T? Like, what stage is it currently in?
Yes. It's under, these requirements are now being bundled together, and the tender is not yet out. Let me tell you very honestly, the tender is not yet out. These are being bundled together. So the systems that we have done earlier have been responding well. At least that is something that we understand from the end user. And they are bundling up with the requirement, they are firming up the budget, so on and so forth. So we'll hopefully should see something coming in Q2 or Q3 of this year of FY26.
Okay, thank you. These are my questions.
Thank you. Thank you.
Sure. So we'll take next question from Akash, sir. Akash, sir, you unmute. You can go ahead, sir.
Hi, good afternoon, Mr. Shah, and thank you for the opportunity. Am I audible?
Yes, sir, you're audible, sir.
Yes, Akash. Loud and clear.
Yeah. Sir, the first question is, what are the main risks, according to you, that we could face for the next couple of years that will, probably hinder our growth, or maybe that we will not be able to meet the guidance that we are giving? What will be the key risks to our business?
Okay. Key risks to the business, and some of them are external, some of them are internal. I'll mention both of that, and you could make an assessment of that. If we have the world going and everyone following the hope that is there, and no one is getting into war or any kind of a thing. That would be awesome. That there's no more requirement of ammunitions, arms that is there, and that could definitely hinder our business growth forward. Honestly, with the current situation, I don't see that happening at least for the next 20 years per se, because the way things are going right now, trying to port us around, and I don't see these things happening. So that's one external risk that is there. On the internal front, if we don't supply things in time, if we supply poor quality, then that's a question that we'll have to answer ourselves. So these are the two potential risks that I see. But honestly, if you ask me, I don't see the government going slow at all with on the defense spending. It's not because they love the sector or something. This is the need of the hour. Look around us, what is happening, right? Look around us, what's happening. We have two not so cool neighbors, both on the northwest and the northeast, and we have to keep ourselves agile and ready in case there is any action.
Got it. So next question is that, for Wave Optics, who would be our clients? If you could also throw some light on what would be the margins in that part of the business, and if at all there is an order book currently, if you could just throw some light on that.
Yeah. So the client definitely is the Indian Army that is there. There are divisions within the Indian Army pertaining to signal intelligence. That's one of our key customers, and the command units that operate these communication channels at the border side. That they are our end customers that are there. We've given several systems around them, different configurations as per what they require. So Indian Army is one of the key customers. Indian Navy also has been talking to us for some of their applications around. So we are working on that. But again, that's work in progress. The Indian Army, we are doing that as well. In terms of EBITDA margins, these are electronic items where we've done our research, we put in the hard work of the years of experience that is there. We see that there is a high possibility. Right now, the scale is too less for us to get the real EBITDA margin kicking in. But we see close to a 25-30% EBITDA kicking in from next year onwards for our electronic defense division.
Sure. And so the valuation at which we've acquired this additional stake or even the 25% stake, what valuation is that into Wave Optics?
Yeah. So when we formed the company, of course, the cost was 25,000 rupees that is there. So that's just the founding cost. There was no cost at that point of time because that's the investment that we had done. And in order to increase our stake to the 15%, we've done at about 4 crore 75 lakh rupees. So that all in all puts in the valuation about close to 23-24 crores, roughly. And this is the valuation that we've got the 15% stake.
Got it.
That's
And
post money, of course. Yeah.
yeah. And what steps are we taking, to reduce our, working capital cycle? Is it possible to reduce it any further, or this is where, it bottoms out?
No, Akash, good question. That is there. We understand that our working capital cycles are longer. We've been working in order to reduce it. And trust me, there is not one single formula that is going to help us. So we're working on three different fronts. One of them is trying to get some advance from the customers. Now that we've been in the industry for long, we see possibilities, and we've actually had some transactions where the customers have paid us 10% advance, so on and so forth. So that's one. Secondly, is we're trying to shrink our manufacturing cycle. We've enhanced our capacity. We've introduced some kind of automation at the plant level also, which will reduce the inventory carrying cost at our end, and hence the manufacturing cycle is shortened clearly. And we are working with a few institutes to work on factoring or the bill discounting matrix and say, so we don't have to wait for that 45 days for the payment from the shipyard to come to us, and we can get it in a shorter time, of course, paying a nominal interest rate that is there. So we are working on these three mechanisms all together. Each will contribute to a small percentage to bring the overall working capital cycle lower. If you look at our September 2024 numbers, our debtor days has reduced considerably. We are putting in all our efforts around that to ensure that we are able to shorten the entire cycle.
Got it. So just last couple of questions that how long would it take us to utilize the new capacity, that we've put up in Halol, and would it be possible to
Yeah. So
debottleneck
we
capacity further?
all the erection commissioning is done. It's on the trial stage right now. So it's under erection commissioning has already been done. It's under trial stage right now, which we think that by about first week of April or something, we should be able to utilize it. That is there. Maybe not 100%, but about close to 70-80%, because some auxiliary equipments are under installation that happen only once the primary equipment is done. So we see that almost functional, you can say, from next month onwards.
Perfect. And just last question, how are we seeing the traction on the doors and hatches and the JV progressing?
Very good. As I mentioned, trials have been very good. Navy seems excited, and they were very, happy with the product that was delivered. And at the JV level, we are just doing the final paperwork around. We had the MD of the company in the first week of March over here. We visited with the headquarters and the naval dockyard, so on and so forth, to conduct the customer meetings around so. And we just completing the final paperwork around the same. So we expect that to close in the next, say, month's time.
And this will be only domestic sales for now, no export as of now yet.
No, this will be for export as well as for domestic market, because this company is based out of Netherlands. They are supplying to all the European navies around, and they were looking to set up a manufacturing base outside of Europe that is there. So options for them were China and India. We've convinced them to come to India, and with this manufacturing setup in India, they are looking to use this as an export potential to both Middle East and to Southeast Asia, in addition to serving to the defense market in India.
Got it. Thank you so much and all the best. Thank you.
Thank
Thanks,
you.
Akash. We'll take the next question from Hemant, sir. Sir, you unmute. You can go ahead with your question, sir.
Yeah, hello. Am I audible?
Yes, sir, you're audible. Sir.
Yes, sir.
Okay, so sir, my question is that we will be growing at 40% CAGR for next 3 to 5 years. So for that, do we require any funding or not?
Okay. Sir, to reach for the existing products that we have, which is the bulbar, the well consumable, and the bricks and the HPF profile, we may not need any capex to continue this growth, because we've just doubled our capacity around. We just doubled our capacity,
Hello.
and there is still some scope. And there is still some scope for further capacity enhancement within the same profile. So we'll not have to set up a new factory or a new shade to get these things in place.
Okay, so we won't be diluting the the shares further, right?
At least for the current products, I don't see that happening, at least for the next about 2 to 3 years that is there. However, we are working on a few projects right now which are outside of what has been spoken, because the classified nature of work, I'm unable to talk about it. But if we have some projects kicking, we may be looking for funds. So for the new project, but not for our existing business, existing product range, not this existing product range.
So will we give preference to debt or shareholders funding or
Yes, sir.
preferential?
Yeah, sir, equity, sir, is too expensive. If you see our books, we don't have over our rather negligible debt that is there. So definitely, first preference will be to look at the debt option that is there. And if we are not able to meet it through the debt option, and the growth seems for sure, and we have that business need that is there for the funds, we may have to look at equity option also. So we are keeping our options open, sir.
Okay, all right. Thank you. That's it. Thank you.
Thank you. Thank you.
So we take the next question from Dr. Jimmy. Sir, you unmute. You can go ahead with your question, sir.
Hello. Thank you for the opportunity. I have a couple of questions that I think that recently we have done a capex. So what we can be the maximum revenue which we can attain from all the shipping and wave optics, and total maximum revenue what we can achieve without further diluting any stake, or without doing any fundraise, or without doing any capex.
Right. So I'll talk on Krishna front that is there, because if we talk on the wave optics, it'll get a bit too complicated, because it's an associate company still. At least on the Krishna front, with the existing products that we have, right? When I talk about the existing products, the products that we are manufacturing and has been matured enough that we have POs for the same. We see with the capacity enhancement, we should be able to reach a number about close to 400 crores in terms of revenue. But remember, sir, there is also scope for auxiliary enhancement that will happen in terms of automation, all that. So we could stretch it another about 20% from there. So that's with the existing capacities that are in place for us.
Okay. Thank you. And so second thing, I would like to know that there is some announcement regarding increase of the defense budget in India, and also in last week regarding some defense budget increasing in Europe. So are we planning to enter some export market or currently being focused on Indian market only?
So for the products that we are supplying for the Navy, the bulbars, the weld consumables, ballast bricks, so on and so forth, and even the Bukhari, these are all designed by, and classified by DRDO. So we are not allowed to export the same as we speak. However, as mentioned earlier, for the composite door hatches, that's completely a global product. And we see opportunities for us to play with either Middle East and Southeast Asia, where we could export them, which currently has been served by the European partner.
Okay, okay. And sir, our we from the past results, I have seen that we are very H2 heavy. And in the last con call also, you told that you are trying to balance H1 and H2 because it affects the working capital cycle.
Yes,
So
yes,
from
sir.
I think we are almost done. For next FY, what can be the percentage of H1 and H2 in the percentage terms, if you can tell? Not absolute number, but the percentage terms for the
Yeah.
proportion.
So honestly, for a balanced working capital cycle, that's a question that someone had asked also. We are wanting to make sure that all the quarters, not even half yearly, all the quarters remain balanced that is there. So let's say we are talking about 100 rupee thing that is there for the full year. We want to make sure that they are equally divided as much as possible in 25, 25, 25 each quarter, because that helps our working capital cycle. There is no backlogging of orders that are there, and everything goes in smooth flow. So that's, while it sounds very cool that H2 is always heavier than H1 as an industry, but we've been working very hard to ensure that we're able to balance that thing throughout the 12 months tenure. Otherwise, just specifically on the last quarter, there's too much pressure putting, everyone at strain. So we've been working hard towards it, and I hope we're able to come closer to that. So that's the target to come to, sir.
Okay. And sir, one last question, that any slowdown from the government regarding payments or orders on any such thing observed in last 6 to 8 months?
No, sir, none, none. I don't see in payment slowdowns and all. We've not been we've been fortunate that we are not faced with that.
Okay, okay, sir. Thank you for the opportunity, sir. Thank you.
Thank you, thank you, thank you.
Thanks, sir. We'll take next question from Mohit, sir. Mohit, sir, you're on mute. You can go ahead with your question, sir.
Okay, can you hear me?
Yes, sir, you're audible, sir.
Yes.
Hi, sir. My question is regarding the new company, the Wave Optics. So, as per because I also come from the hardware RF background, I understand the complexity of building the products from groundworks. It needs a lot of investment capex in terms of R&D, doing the field trials, testing. So, my question is, when it was incorporated in 2023, it is very early. I see you're able to build a product and also able to sell it. So I wanted to understand, we are doing all this design R&D in-house, or we are outsourcing some part of that to somebody from India or China or somewhere else. Yeah, thank you.
Sir, you are from the same hardware. That is our secret recipe. I may not like to reveal that is there, but okay, that's the joke part, right? No, this is all thanks to the team that we have. They have, all each of them has over 15 years of experience in the same field that is there, and the experience is helping us build products. All the R&D that we do in-house. Nothing of that is outsourced. And sir, China to allowed nahi hai. It's a
Yeah.
taboo word in our company to be spoken about. So nothing literally comes from there. We do import some of the components, but those all come from the US or from Israel, which are not available in India. So those need to be imported. That is there. But this entire credit to the same to be able to do research on a short span and to be able to do the field trials and field trials converting to purchase orders. So you can understand the acumen and the knowledge of the team to be able to deliver that activity.
Okay, so we build the labs and R&D centers in-house, right? This is
Yes,
what you're saying. Okay,
yes.
that's
We
all
have
from
we
my
have a we have a test lab in Bangalore where everything is tested around. I am not qualified enough to talk on the radio frequency.
yeah.
It's pretty complex subject that is there. So I'll just leave it at that.
Okay, thank you, Anga sir.
Thank
That's all from
you.
my side.
Thank you.
Sir, we'll take the next question from Dhruv, sir. Dhruv, sir, you're on mute. You can go ahead, sir.
Hi, am I audible?
Yes, sir, you're audible, sir.
Yes.
Can you give a future guidance for EBITDA and PAT margins? Like, will it sustain on the current lines or will it grow?
क्यों सर आपको डाउट है? सस्टेन होगा कि नहीं होगा?
No, I don't have doubt, but
हाँ.
will it
No,
increase?
sorry. Don't do it otherwise. It's just on a lighter note. We've been talking very serious questions. My personality is not like that, right? So just want to make sure the forum stays light. No, so we've been working hard towards it, and we see that we'll be able to maintain the margins that we are holding, and probably work and strive towards improving the same too.
So, how much it can grow? Like currently, PAT margin is 11%. So, can it be pushed towards 12, 13, 15%?
यस.
Any targets?
सर मतलब ये एक एक साल में तो नहीं होगा सर. ये धीरे धीरे हम 12, 12.5, 13, 13.5 ऐसा धीरे धीरे करके लेके जाएंगे. दैट्स व्हाट वी आर वर्किंग टुवर्ड्स. But there is
Oh,
possibility to get there. It's not that we are so tight that there is no scope. If we, and it is all on us that is there. We have to become more efficient so that the bottom line increases. So we are working towards that segment, sir.
oh. And can you give order book value in wave optics, like in monetary terms?
Mm, uh, I'll put it differently, right? I'll put it differently. I may not be able to reveal it because it's not public disclosure that we have to. It's a private limited company, so on and so forth. So we did a revenue about close to 4.5 crores in September 24 in the 6 monthly that is there. And we see ourselves growing. You can do the math around that, what numbers we get to March 25 with the same percentage ratio. And we see ourselves growing at about close to 50-60% CAGR from there on, because the potential and the addressable market in that space is very, very large. So for us to be able to get to a 50-60% CAGR margin and since you're starting at a low base level, it seems very much possible.
Uh, yeah, quite helpful.
Yes.
Thank you.
Thank you.
Thanks, sir. We'll take next question from Ashar. Okay. Praneet, sir, you're on mute. You can go ahead. Praneet, sir, you're on mute. You can go ahead with your question, sir. We will take the next question.
Yeah.
Yashwardhan, sir, you are on mute, so you can go ahead with your question.
Okay. Thank you. Hello, Ankuji. I just wanted to understand. ArcelorMittal makes pulp flats, if I'm not wrong. So, it's different from pulp bars, right? So, if you could just touch upon that.
No, sir. Bulk flats, bulk bar is the same thing. It's just different nomenclature. And I'm sorry, but Sir ArcelorMittal does not manufacture the same.
Okay. And secondly,
Because I'll tell you why, sir. So ArcelorMittal A, it's a very large company, AMNS as we call it, ArcelorMittal Nippon Steel, the erstwhile SR Steel. They specialize in flat products. So they make plates and sheets, plates and sheets that is there. That is their specialty. Is for them, it's too small a segment to venture into. They are a very, very large global enterprise. So I don't think this even interests them.
okay, got it. So, competition per se, we have only one or two, say, competitor in India that I think in the private space, if I'm not wrong, right?
Yes, you're spot on, sir. You're spot
Okay,
on with that, sir.
got it, got it. And just secondly, I wanted to understand the machines in our facility. Are they imported?
No, so we have a few electronic stuff which is imported that is there, but those are for control systems, so on and so forth, better thermocouples and all of that that we get from the US to ensure we're getting the right temperatures around. But I would say 90% of the equipment is tailor-made. It is designed for our particular requirement that is there and is sourced from Indian companies. But both the companies that we source from are, of course, in tie-up with one is a Japanese company, one is a tie with a US-based company. So that way, but they are almost all make in India products that are there. We just the design element comes from there.
Got it, perfect. And any near-term replacement of any of these machines?
I hope not, sir. We don't want to think on those lines, but no, we maintain them well. These are expensive equipments. This is, this is the main engine how our company has been growing. So we take good care of them, and we hope we don't have to do major overhauling of that. Routine maintenance keeps going on. We do preventive maintenance. We take a lot of care of these equipments and machinery. So at least fingers crossed, we've not faced something so far.
All right, got it. All the very best.
Thank you, sir. Thank you.
Thanks, sir. We'll take the next question from Dipanshu. Sir, Dipanshu, sir, you're unmute. You can go ahead.
Hello, am I audible?
Yes.
Yes, sir.
Yeah. So, sir, basically, I'm a shareholder as well as tracking the company for last 2 years. So, I have just two questions, two, three questions. First question is like in June 2024 con call, you mentioned, the management mentioned, from Wave Optics, we might get a revenue of approximately 69 CR based on some trials and something, potential revenue, right? So, is it somewhat clear to what you
Yes.
have in your mind? Is it like going to happen like in next 1 year or 2 years? Anything you want to say about that?
Yeah. So honestly, I've just barely heard your question, but I'm assuming what you're trying to ask is related to wave optics around there as well. And in some con call in June of 2024 is what you're referring to.
Right now,
We had said that there is a potential. Yeah.
potential of getting an order of 1,000 to 2,000 system. Each system is going to cost 9 lakhs. So I just
Yeah.
estimated it at around 69 CR.
Yeah, no, so you're spot on. I answered that question with Moksha to begin with, and the requirements are being bundled right now. The trials have been successful to what we have supplied so far, and once the requirements are bundled up together, we see some action happening. Of course, it's not going to happen at one go. That one single purchase order is going to be that value. They will do it bits and pieces because this is a very crucial component for signal intelligence that works through for the Indian Army. So, but I would say that around Q2, Q3, we should have some action on that. That's what we understand from our customer.
And whatever order we get in Wave Optics, we will be realizing half of the revenue because we have 51% equity, right?
We have 40%. No, we unless it's an associate company, so we cannot add that to the revenue in the consolidated business there as of now.
Okay, okay. And one more thing in the same phone call was regarding the composite doors. The estimate was given like it can bring like 50 to 100 CR of revenue in the years to come. So anything about that? Like, is it going to be in the next 1 year or something?
Yeah.
The revenue from composite
Yes,
doors.
I think that is the plan, Bhatia sir. That is the plan, and we are working towards that. The product has been proven in the trials that is there. The results have been excellent, I would say, and the Navy will be soon inducting them. But these things take time, right, to kick in. So it's not going to happen like tomorrow or something because it's a new product. It has to go through type testing that is there, and it will go through eventually. So that's the long-term plan around it.
I'm just asking what can we expect major action happening in FY26 about the composite doors and wave optics orders, or maybe it takes more than a year for now.
We'll see some action, major action. I hope too that we see some major action, but let's be
In two,
conservative and
I can
realistic. So
expect
we
in
see
two
some
years.
action happening.
Yeah, in 2 years I can expect this can both of these can happen. Yeah.
I can't hear you, sir. There's too much background noise.
Okay, okay. Sorry. I'm just asking. So in 2 years at least we can expect these things can happen. That's much we can
Yeah,
expect, right?
yes, sir. Yes, sir. Yes, 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 definitely.
Yeah, at that time, you also mentioned that we are looking forward to a future of 500 crore, 400 to 500 crore revenue from 7, 8 different products. So if we talk about in like FY26, 27, 28, it might take some time. So what is your view about that? Like FY27 or 28?
Dipanshu, sir, we can't hear you properly. Can you please write your question in the chat box? It will be much more.
Just give me a second. Just give me
Yeah,
a second.
please. Okay.
Yeah.
Sorry for the noise. Is it okay now?
So too much of background voices. We cannot
Is
hear
it
you.
okay now? Now I have a last question just. Okay.
Yeah, please go ahead.
Yeah, yeah. So we had like some talk now about like having 400 to 500 revenue, crore revenue from multiple products in near future. So can we expect that near future to be FY27 or 28? Well, not being definite, like can we be bullish like in FY27, 28 we might see a 400 to 500 CR top line?
So we are, I've given a guidance on how we wish to grow in terms of CAGR. So, you could do the math around, and that is our target to maintain our growth momentum. And we are hopeful of maintaining that, sir.
Okay, but okay, cool, cool, no issue. Okay, thank you very much.
Thank you. Thank you.
Thanks, sir. Tejas, sir, you unmute. You can go ahead with your question.
Yeah, thank you for the opportunity. Mr. Shah, just one couple of questions. Since you mentioned all the R&Ds that we are undertaking, do we have any patents or do we have any patents that we are applying or are in the process?
We are in the process of applying, particularly for wave optics. Some work is in progress right now, but again, too early stage to call about it, because it has to go through all the requisite formalities per se. On Krishna Defense, we are unable to do anything because these are all have been developed in conjunction with DRDO labs. So that does not work in, and this is classified. So revealing details also is becoming a challenge.
So if my understanding is correct, so DRDO would be holding the design rights, the patent rights, and we are basically the development partner for that. Is that the correct understanding for that?
Yes and no. It's not only development partner, is because we have also involved in the research bit that is there. So it is not an exclusive thing by the DRDO, but it's kind of gray that is there, sir. So I wouldn't want to say, okay, what you said exactly is true or what I'm saying is true. Somewhere the truth is somewhere in between. So, but these are specifically designed for military applications, and this has to stay within the between DRDO and the development partner. So that is how it is working out for us now.
So, fair enough. And just to reiterate, just to circle back what you said earlier, in the FY25 update, Feb 25 update, you have said that there's a 300 crore order book on a combined level consolidated basis, and we have done 145 CR till December 24. Is that correct?
Yes, it's
Top line.
true.
Okay. Thank you, sir. That's all from my side.
Thank you. Thank you.
So we'll take the next question from Ashar. Ashar, sir, you're unmute. You can go ahead with your question.
Sir, hi. Sir, I just wanted to understand. So when we see past financial statements, right? तो उसमें वैसा इश्यू आ रहा है कि हम लोग पहले ट्रेडिंग ऑफ स्पेशलाइज्ड स्टील मटेरियल भी करते थे एंड देन वी स्टार्टेड टू डू बल्क बार्स. At that point in time, also हम लोग के margins were close to 15%. But as we go ahead, हम लोग का जो bulk bars and other specialized products है, उससे we are getting good amount of revenue. But still the margins are constant at 15% where the trading mix is going down. So sir, and on top of it, हम लोग जब भी product profile भी आपका देखते हैं तो 15% is on the lower end of every product. आप bulb bars देख लो, आप welding consumables, every product, right? So I just want to understand why are the margins so low when 15% is like the benchmark for each and every product of ours.
Interesting question, one. I think I've explained this to you, once when we met across, but I'll do it once again for you and for the forum. The trading part that you spoke about, it's a very small number that used to happen 3 years back. If you see the trading component for the last 3 years, it's almost negligible because you want to focus on our cost trend, which is the manufacturing around that is there. When you have a customer and you want to make sure that you're giving him all the items, certain things that we were not manufacturing, we were sourcing and giving it to the customer to make sure the complete package is given. But we have changed our strategy and we are focusing only on manufacturing products that we are doing, and hence the change shift away, because that as is the business was too small, so we don't want to continue that business because we were not adding any value. It was more like a trading operation. So we have ceased to do that from now, for the past 3 years now at least. As compared to the margins that are there, I think the margins are growing. For our base was too small that is there. We are doing a lot of spend on research and development, as I mentioned to you, which gets built in the cost that is there. And you're talking about 15% EBITDA levels or the margins that you're sticking to. If you see in point wise in every year on year, there's been some jump that is coming in. in addition to the 40-50% CAGR that is building in every year that we are able to build it. And with the volumes going up, right? With the volumes going up, they will see that trajectory move forward.
Got it, sir. Sir, and last question from my end is that when we see Vabo composites, right? So Vabo composite is purely, matlab, is mostly for the commercial ship and shipyards. So when we are developing doors and hatches, so for India, our focus will be primarily Navy, right? So are we planning
Yes.
to also enter into commercial doors and hatches of ships soon?
So what we are doing, and the initial focus is surely around naval vessels that are there. These are all fire-rated ones per se. And with Vabo, what they are doing, they are generally the major supplies is to naval ships, to the French Navy, to the Dutch Navy, so on and so forth. And what we are wanting to do is initial start off with the Navy, and even commercial shipbuilding in India is growing. And as I mentioned earlier, we see this as an export potential for both Middle East and South Asia. So we are open enough, and we can give these products for export also, unlike our other products that we have right now that we are not allowed to export. So we see that as a possibility, and that actually helps us because commercial shipbuilding is actually a much larger than the defense shipbuilding.
Got it, sir. All the best, sir. That's it from my end.
Thank you. Thank you very much. Thank you.
So we will take couple of questions from the chat box as of last questions. Harsh sir is asking, in the products supplied by us, are we the only supplier with the percent share allotted to us by our clients?
So it depends from product to product, but most of the products we have there's one more competitor that is there. These are highly classified and complex products that per se where requires naval certification approval before we can actually get it through it. So we generally get about close to 50% of what the addressable market is there because these are limited tenders that come through.
The
Next question is, yeah.
What is the percent cost of our product to our clients in the entire value chain?
Again, very difficult to put it in percentage because these are very large platforms. You have a board ranging from anywhere from 2,000 crores to 4,000 crores that is there, 40,000 crores. So very difficult to put a percentage number to that in the entire value chain because the complexity of the platform, the kind of missiles it has, the kind of propulsion it has. So very difficult to put a percentage number to it.
Okay. Who are our peers? What is our edge over them?
As I mentioned, there are two competitors. There are two people who are not two competitors, two people who supply this for each of the product. One of them is Starwire for the bulbars, and for the other two products, we have Medani, which is a DPSU, who's doing that.
Can our products be used in commercial shipbuilding?
Yes, it can be, but not the same grade that is there. They don't have this stringent requirement. So it can be used in commercial shipbuilding. We are doing so for Coast Guard, as I mentioned at the beginning of the call. So yes, the answer is yes.
Okay. Please provide some color on margins of the different products and what do we expect the overall margins to be over in next 2-3 years?
Yeah. So currently we are on average product base to add to what Ashar was saying. We are in the EBITDA range about close to 15%. We see that being maintained, and we should be able to improve that as we move forward. To put a number to it, very, very difficult, but we are striving and working hard towards improving those numbers too.
So one of the investors asking, fundamentally, we are working capital incentive business with 200 days of cash cycle and 15 to 20% ROE, but our aspiration is to grow at 40%. What would imply doing fundraise and fund our capex and working capital 2 years?
So we've done our fundraise already to cater to the capex that is there, and we are confident of achieving this with our existing product line. We may not need to do any fundraise, and even if it means doing something, it would be through the debt option. for our existing product range. But as I mentioned, we are working on a few products, new products that we are developing, again classified in nature, and if those fructify, we may have to look for other fundraising, not for our existing product, but for the new products that we are working on.
When we can expect the listing on the main board, sir?
So we have to finish 3 years. Once we finish the 3 years, we will be applying, but that's the plan around.
Great. So that's how we answered all the questions. So thank you so much for answering all the questions of the participants. So thank you so much, Ankur sir, for participating in Arihant conference, and to all the participants, thank you for attending the Bharat Connect conference. We can end up the call over here. Thank you so much, Ankur sir.
Yeah, thank you all. Thank you very much. Appreciate your questions. Good questions. That is there. Appreciate all of you giving in the time to listening to Krishna Defense, and as always, thank you very much for your support to all the shareholders. Thank you very much.